Just in time for Mother's Day, give Mom a gift that will last several minutes and doesn't cost you a dime. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Wall Street wrapped up a week of record highs with kind of a so-so trading day. Alcoa and Caterpillar were two of the big stocks, keeping the Dow index from moving higher. Joining me in studio today, James Early and Matt Koppenheffer, looking dapper, particularly you.
Thank you, Chris.
All right, our top story. Facebook is reportedly in the final stage of negotiations to buy Waze, a GPS software company based in Israel. The software has gotten rave reviews because it enables drivers to provide real-time alerts about traffic, accidents, and police activity to the entire Waze network. Earlier this year, Apple was working on a deal to buy Waze for $500 million, but Facebook is preparing to pay upwards of $1 billion. Going to pay double what Apple paid? Is this a good idea?
Well, I think if Facebook is looking to further creep out the people on the Facebook website, this is one option to make sure that they know where they are at all times. But it's also, I think there is a potential bright spot here. This is a better way to target advertising. It's one thing to say that I'm a male in my 30s. It's another thing to say I'm a male in my 30s. I've liked Starbucks on Facebook. And P.S., I pass by a Dunkin' Donuts every day on my way to work. And advertisers love to be able to better target their audiences.
So if it's a better way to target their audience for advertisers, that's still an advertising model. There's no move towards membership here.
It is creepy, Chris. First of all, I agree with Matt. I don't know how much this is something that another company could buy, not just Facebook, and still monetize via ads. I don't know how much value add, unless I'm stalking my friends. I mean, Facebook specifically brings into this. I think that's going to be the question.
Next week is the one-year anniversary of Facebook's IPO. It is trading well below its IPO price. What do you think of the stock?
Oh, I don't get the valuation. I look at the long term. I think about what I was doing 10 years ago or so when I first got on Facebook, and I think about all of the things that have disappeared or have gone away since then. I think I was using Ask Jeeves as my search engine at that point. So when I think 10 years ahead, I have real questions of where Facebook is going to be in this broad tech landscape.
All right, let's get to some of the day's movers and shakers. Shares of the Gap up after reporting that same-store sales in April rose 7%. The company predicted first quarter earnings will come in higher than analysts are expecting. The last time Gap was trading this high, Bill Clinton was president.
Well, there you go. Apparently I haven't been shopping enough there because I'm a Banana Republic customer. That was the only main section of Gap that wasn't outperforming. There's 8% growth in Gap comps for April. There's 9% growth in Old Navy comps for April. It's really looking like Gap is coming back, and I don't think anybody would have been saying that just a few years ago. And the stock was beaten up to such an extent that if you look over the past 5 or 6 years, I think the stock has just about doubled.
Is that a Banana Republic shirt you're
This is
wearing
indeed
today?
A Banana Republic shirt that I'm
I'd rather like it, man.
Shareholders would like it if you did a little more spending.
Yeah,
seeing a different shirt next time. Shares of Tesla Motors continuing to rise just one day after reporting its first profitable quarter in company history. So maybe they're getting some new investors, and with it, some higher expectations for the stock. Is that a good thing?
Good. I'm a greenie, Chris, so I like this as much as the next guy. But this is first profit in 10 years, and 10 years is a long time to go without a profit. And there's a 40% short interest too in Tesla. So a lot of this is just short squeeze. It's still 37.5% short interest out there, which is pretty high. Question is long term. We don't know enough. The Nissan Leaf flopped. The Chevy Volt flopped. Tesla doing pretty well, but they got a long ways to go.
Shares of Dell trading at more than 4 times the normal volume today. Activist investor Carl Icahn is proposing an alternative to the $24 billion buyout deal led by founder Michael Dell. Where is this going, Matt?
Well, what's interesting about the new offer is that Icahn and Southeastern Asset Management, who he's working with on it, think that Dell is such a great opportunity that this new offer is better than all of the others because it allows public investors to keep part of the company, and that is, they think, a big selling point of the deal. We looked at Blackstone. Blackstone was part of this kind of shoving match a little while back. They exited because they thought this really isn't that attractive of a business. So, I'm kind of wondering what Icahn's doing. I'm on the same page as Blackstone here.
You're staying far away.
I'm staying away.
And finally, Universal Display down after first quarter results. Revenue rose 19%, but the company lost nearly $5 million for the quarter. all of this was kind of expected, James. Nothing really out of the ordinary. Why the big drop today?
You know, Chris, as any man who's been married more than 6 months can tell you, sometimes whatever you do is just not good enough. And with these guys, they beat on revenues. They had a bunch of analysts upgrade. They at least matched on earnings, but they still just got pounded down. You know, I think whisper expectations were just too high. This is still a very new technology, new industry, so it's just yet to be proven. It's hypersensitive at this point.
All right, that's going to do it for Friday. Let's look ahead to next week. Matt, what's the stock you've got on your radar?
So I'm going to be watching Walmart. They're going to be reporting earnings next week. So we saw Whole Foods report this week. It was a great report. Everybody got very excited. That's obviously the high end of the market. Walmart is on the low end of the market and hasn't been exactly shooting out the lights, but they've been moving along. I really like what they're doing with the smaller store formats. I think that may be a big driver going forward. What I'd be worried about here is that middle ground where you're between the high end and the low end. I think a lot of those players get pretty squeezed here.
All right, James, what about you?
Chris, 10% yields are not inherently safe all the time, but one of the safer 10% yields is in a company called Brightburn Energy Partners. The ticker is BBEP. This is a limited partnership that owns and leases oil and gas producing properties. I like it a lot.
All right, for James Early and Matt Koppenheffer, I'm Chris Hill. Thanks for watching. Happy Mother's Day.
People on the show may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. Don't buy or sell stocks based solely on what you hear.